the most underrated tool in TradingView, and it is completely for free. If you've ever wondered how many contracts you need to open to be comfortable with the risk, then this tool is for you. Okay. No more guessing, no more, hey, I'm opening 3 contracts all the time because that's how I feel. This tool will show you exactly how many contracts you need to open per each position that you take into the futures market. Okay. Well, actually, you could use this for any type of market, but we're going to be talking about futures specifically today. So let's get to it. So right here on the screen, I have a chart of micro NASDAQ, okay, micro NQ. Now, here is how you're going to use this tool and, use it to your best advantage. You're going to find it on the left toolbar here. It's going to be the first, second, third, fourth, fifth, okay? The fifth icon, you're going to click on this little arrow here, right here, okay? And then we're going to use the long position and the short position. What I would do is star them both, okay? That will put them into your favorites toolbar, so you have it all right here, okay? And there we have the short, and then we have the long position. So how do we use this tool to understand how many contracts can we open that we are comfortable with our risk? So let's say we are thinking of going into this position right now, okay? We want to get in, but we don't know how many contracts. What we would do is, let's say we are trying to go long. You're going to click the long position tool. You're going to click where your entry could potentially be. Okay. So if you're looking to open it right now, you can click right there. Okay. And this pop-up will come. Okay. Now, how we're going to use this is, let's figure out the settings a little bit. So either you could right click and click settings, or you could also just double click and you can get this pop-up for the settings. Now, here's what you want to change. You want to change your risk to USD, and you want to put here how much you typically risk per trade. Now, this is something that you have to input yourself based on your trading. There's a lot of traders who are like, hey, I only open 5 contracts per position, which is very flawed in nature because you can't just open a random number of contracts all the time when the risk changes, volatility changes, right? Sometimes you put a wider stop loss, sometimes it's a tighter stop loss. 5 contracts, 2 contracts all the time, right? That's not the same. What you have to keep the same, what you have to keep consistent is going to be your dollar size. How much you are risking per position. That's what you got to keep consistent. So you come up with a number, okay? What is your average losing trade? Let's say it's 250, okay? You put USD here and you leave everything else as is. You go to style and you make sure that the compact stance mode is unchecked, okay? Some defaults have it checked, some have it unchecked. Leave it unchecked. And the price labels is up to you if you want to have those or not. And you also can use like always show stats. Could get a little bit bulky because if you click that on, these numbers always stay on. If you click that off, right, they're not there anymore. It just shows when you hover on top of it, which is, how I use it. But let's talk a little bit about what we just did there. So we put our risk at 250. Now, how that translates into this specific kind of setup is, first thing you have to do is this. Your target, you can put your target here visually, but this will not really be used to look at your position size. Okay, this is just for you to have a visualization of where your target could be, and if you want to look at your risk and return. Okay, and then now here is the most important part: putting your stop loss. Okay, so you can put your stop loss based on price action, based on moving averages, based on the VWAP, right? Based on a certain amount of dollars, points, whatever that be, right? Obviously, market structure would be the best thing. So let's say we're putting it right below these lows here. Okay. Now, once we do that, there's a couple of numbers here that we need to pay attention to. Risk and reward ratio is obviously key, 1.96 in this example. So about 2, great, right? My recommendations are 1.5 or higher. But what we need to pay more attention here, and what I made this video all about, is this QTY, which is basically quantity. It's showing quantity 10.417. Basically, what that means is if you are entering this specific market, micro NASDAQ, if you are putting your stop loss here, and if your entry is right here, you should be risking about 10 contracts. Not about, but basically 10 contracts, not more than that. You can risk less, right? But if you want to keep your losing position not more than the 250, which we placed here on the settings, then you should not surpass 10 contracts. Okay? This is the exact quantity amount you should open to keep your risk consistent. Okay, again, keeping the same number of contracts all the time consistent is not the consistency you want. Okay, now this would be the same thing if we were to open another market, for example, gold. Okay, we open gold here. let's say the same thing. We're opening this long position right here. We click our entry, we click our stop loss right there. And then for gold, it shows us 2.5 contracts. Obviously, there's no such thing as 2.5 contracts. So if you want to risk 250 or less, you open the lower one. So 2. If you want to risk a little bit more than 250, right, you have that wiggle room, you can open 3. But again, 2.5 just keeps it at that 250 risk there. So basically how it's working, right, as you can see, it's basically looking at your stop loss value, right, how many points, how many ticks you are risking, and then looking at your 250 risk and translating into quantity. Look what happens on the quantity if we actually drag this lower, so increase the risk. Look at that. Quantity is dropping, dropping, it's dropping, it's dropping, it's dropping. So like if you were to open this position, okay, and put your stop loss right below this previous low here, this market structure low, it's showing you can only open 0.806 contracts. Basically, it's telling you do not open this position, okay? Because based on this entry and based on the stop loss, you will be risking more than 250. So not only you can use this tool to understand how many contracts to open, but you can also use it to be like, hey, which positions I should not open, right? Because they will go against my risk management settings. Or what you could do in this example is just, hey, if we're on gold here, you could go to micro gold, right? Same chart, just 10 times less the risk. If we were to look at that same trade, same stop loss, you could see, hey, we can open up to 8 contracts here, okay? The same thing, guys, would be for a short side, okay? So if we were to go to the short position, make sure you are, using the settings and putting it when you first, start using this tool. Once you do the settings one, guys, that's all you need. Unless you are trading with different sizes, right? So let's say, for example, this month you trade with, a 250 average loss, and then you do good, and the next month you want to size up. That's the only moment you should change this, really, okay? Or if you have different account sizes, you could start doing templates here, okay? So for example, hey, you can save this template as a, I don't know, 50,000 funded account. And then if you're using a bigger account one day, 150,000, you can create another template with a bigger risk here, so you don't get confused. But yeah, for shorts, it would be the exact same thing, guys, right? If you're looking for shorts, let's say we're like, hey, prices are approaching day high. I want to be able to short the day high. Okay. So you're like, okay, let me put that. I'm going to enter right as it hits day high. I'm going to place a stop loss of, I don't know, you could look at market structure in the past. You could do those previous highs up there. So you're like, great, that's my risk. Quantity, I could open up to 20 contracts, up to 20 micro gold on this position and still be able to risk the 250, right? $250 or less. So I hope it's clear how this tool works. Again, there should not be any more guessing how many contracts you need to open. There should not be any more, consistency on the same contract size all the time, because that doesn't make sense either. The only thing for you to focus from this video on is, again, pick a average risk, right? Pick what type of risk amount you want to lose based on the dollar amount, okay? And then just get good at placing stop losses, right? So figure out market structure, figure out where those key areas are on the chart, so you can start placing those strategic stop loss areas, and then using that to also look at how many contracts you need to open so you're positioned correctly in these trades, okay? If this video helped, make sure you hit the like, share, and subscribe button. It does help us with the YouTube algorithm quite a lot.